Hello, my name is David O'Kelly and you're very welcome to KPMG's Capital Ideas podcast. Today I'm speaking with Laura McCoy. Laura heads Elysian Capital in Ireland. Elysian has already completed 3 deals here, and today she's going to tell us how they plan to invest in deals between 20 and 100 million. Laura, you're very welcome to the podcast.
Thanks, David. Great to be here.
Laura, can you tell me a little bit what you're trying to do with the fund?
Sure. I think probably need to start from the beginning really with Elysian, just to give you a sense, I suppose, of who we are, what we're all about, and the types of businesses that we are looking to invest in. So Elysian, I almost feel like saying we're a new fund, but we started in 2007, so that's how fast time flies.
Still a new fund.
Still relatively new. So Elysian was set up by our CEO, Ken Terry, and our chairman, Chai Patel. Ken had been in private equity for a number of years, done a number of large deals, and got to the point in his career where he kind of said, I'm going to step out of this private equity. I'm doing huge, big deals. They're like super tankers. It's a lot of sort of the financial side of things and the kind of billions. Mm-hmm. And what he really missed was working with entrepreneurs and smaller businesses. So he decided to set up his own fund and did so with a blank sheet of paper, essentially. So great opportunity. And he joined with Chai, who he had backed in a previous transaction, the Priory Healthcare Group. So they had a really good relationship, and they went into this together, partially investing their own money, and also to say, how can we do this a little bit differently to the way it's been done before? Chai's an entrepreneur, a CEO, somebody who's run a business, and that sort of ethos formed the foundation of Elysian. So what Chai said was, I was in a private equity transaction, had a very positive experience, but what I could have benefited from was having somebody sitting on the other side of the table when we were talking about doing a transaction that had sat in my seat, that understood kind of the daily pressures of running a business and your own P&L and the team, et cetera, whilst the financial side is all very beneficial, somebody who sat in my seat would be really great to have kind of as a part of the private equity team, would add a different perspective.
Yeah, interesting.
So that kind of started from the beginning really, and it's come all the way through. So now we have almost half of our team are people from backgrounds of running businesses, rather than being private equity professionals, who we also have. So we've kind of got a bit of a blend, I think, of people who have run and owned businesses and sat in the seats of the people that we're looking to back, and then people with investment experience, banking experience, etc., sitting alongside them.
And in your own career, you're most recently an M&A advisor. So within the deal, we'll talk about after the deal in a little while, but within the deal, what difference does that make in terms of how you might look at something versus another private equity fund?
Sure. I think it also does come down to the sort of Elysian ethos, really, right. Which is entrepreneurial. Yeah. As I mentioned, we set up our own fund, and we are heavily invested. So we're sort of about 10% of the investment, which I think compares to something like 2% traditionally.
Yeah, significant,
So there's a genuine,
you care.
We care, absolutely. And whilst we all hope that we're going to benefit in upside situations, means we also are very much there through any bumps in the road, and will fight for everything. And we are, I think, genuinely, the phrase that gets used a lot in private equity, but we're genuinely aligned with a management team and with a founder when we're investing kind of that level of our own equity or our own funds into a deal. So I think the combination of kind of having people who've run businesses, having our own investment, a bit of an entrepreneurial ethos, and also a focus on partnership, I think is how we hopefully differentiate against some other funds. And I think different funds will be for different people, just as private equity will be for some companies and not for others. So I think that's probably one key thing that has come through right through my career, has been chemistry, and that real fit between somebody who owns and runs a business and is looking to grow their business, and somebody who's an investor and would like to be a partner alongside that. I think having that sort of connection, establishing that trust early and that fit is absolutely key, both at the very beginning of a process and all the way through.
Yeah, and it's always, whenever we're running a process, we try and kind of, particularly private equity style process, try to make sure that people get to know each other a bit. What do you try and do during a deal process to achieve that?
It can be different things, I suppose. Like, we'll obviously be looking to understand the business as best we can, and hopefully asking some questions that are, particularly with the operating guys, that are a bit more specific to sort of their business and their supply chain and the real sort of things that are going on in their business. I think we also like to spend some time, if we can, with a management team away from a process. So having a bite of dinner, whatever people are into. It might be a bite of dinner and a glass of wine. It might be going to watch a football match or do something that, you can kind of establish a bit of rapport with people. I think that always helps to kind of get to know the individual, so that when you're working through the various parts of a transaction, you've already kind of established that, these are people that I like and that I want to spend time with.
Yeah.
And I think that always helps. And I think also, there's always this talk about proprietary deals, etc. But genuinely having an advisor on the side of the business owner, founder, entrepreneur can be a really helpful thing for us as well, because I think people like yourselves can deal with the questions of, this is normal, this is what a private equity fund will look to understand, and therefore they're prepared, because we are probably coming from slightly different worlds. People who run their own businesses know their business inside out, know their market inside out, but they probably don't spend as much time doing the type of work that we're doing, and equally vice versa. So I think having somebody that has the trust of sort of both parties is always quite a helpful thing in a transaction.
Yeah, I think that's very fair. I think actually, and building trust through the transaction process, and people acting kind of reasonably and sensibly, and so on, which by and large, to be honest, most private equity funds do. They just want to get the deal done. I
think that's it. I think it's integrity, and it's kind of, what's integrity mean? It means doing what you say you're going to do, and delivering on that, and people will see that throughout a process. I think, within the team, there is quite a number of years of experience there, and we've seen quite a lot, and we've seen ups and downs. So I think what that means is that you tend to be dealing with a senior team, a pragmatic team that recognizes, how businesses operate and the ups as well as the downs. And we're pretty calm, I'd like to think, in the sense of things will change throughout a process. Yeah. As well as throughout an investment. So I think it's kind of being calm and balanced, and having the conversations pretty directly, and kind of building that rapport in the same way we do in other aspects of our lives, I suppose. Yeah, it's hard to replace the benefit of experience and just having seen shocks in either deals or in companies before, and how most things can be dealt with. Most things can be solved. Yeah, that's exactly it. Having I guess that mix of private equity professionals and entrepreneurs. Entrepreneurs maybe have a reputation for being fairly clear in their views, tend to like to express their views. How does that manifest for the company? Like, do you tend to be an investor that likes to put its mark on companies you invest in? How's the boardroom work? Sure. I think it's definitely worth being clear that we are investors, and we're not managers. So we don't get involved in managing the business. And I think it comes back to that key part around partnership. We're partnering and backing a team that wants to grow their business, that has aspirations, and has a plan. Yeah. And what we do is we're involved more at the board level, the strategic level, whether it be sort of M&A or scaling up the team, which often happens because you're kind of saying you might be going from 3 million to 10 million over 3 years, and that's going to require, potentially some new hires, some new systems, all of that kind of side of things, properties, all of that. We'll be sort of involved in that level. And I think it's interesting that you mentioned the board, because we do have board meetings like most private equity backed businesses would do. But I think, again, coming back to relationships, it's not about the sort of couple of hours of the board meeting. It's not about sort of a company spending all their time preparing for this board meeting and presenting it to their investor. It's genuinely, and when it works well, it's a relationship, so that the CEO, the CFO, etc., sees us as a sounding board, and hopefully somebody that they want to talk to. And on a relatively regular basis, we'll be having those conversations as they happen, because businesses are dealing in the real world, and things come up sort of in real time, as opposed to sort of on monthly cycles.
Is that a few days a week you might be in touch with the company, or
it depends. It depends on what's going on, So it's as and when the business feels there's a need. We find genuine that CEOs will pick up the phone, sometimes every week, sometimes every couple of weeks, depending on sort of what's going on. And sometimes it is genuinely just to kind of have a little bit of a chat and a sounding board for just sort of what's going on day to day. So,
And when you invest in companies, is it mostly with a buy and build strategy to take that business from 3 to 10 by buying a few other companies and doing a few other, maybe other types of expansion?
Sure. A mix again. We back teams with a plan, and that can be a combination of organic growth, continuing to do what you're doing, potentially winning new customers, going into new markets. It could be going into new geographies. Wherever those opportunities are, we're supportive of that. Often there is an M&A opportunity. If there's a market that there's some consolidation to be done, or if there's a reason, I suppose, to do it. I don't think we would focus on M&A and acquisitive growth for the sake of it. It's more if there's a genuine opportunity and it could bring something to the business, then we're supportive. But all of that is in tandem and in conjunction with the team. So CEO, the senior team, they're going to know the key players in their market. We might from time to time come in with some different ideas. Some of the businesses that we work with, say for example, Cross Rental is one of our investments here in Ireland. They made an acquisition in the UK, and that was one where it worked quite well with us, in the sense of I'm here in Ireland, we have a team in the UK, so we're kind of in both markets. The Cross team is kind of mirroring that as well, but we also have, within our sort of portfolio of companies, sort of 14 or so companies, we have companies with operations in the US, Europe, various other locations. So we can tap into that, and that network can be helpful. But I think it's very business specific and plan specific.
And how, if you don't mind me asking, how did that acquisition come about? Was that something that the management team identified and said, we need to go do this, or something came across your desk through other activities, or that you've an analyst somewhere sitting in a dark room crunching numbers and finding deals that they should be doing?
I think our analysts would be very upset to sit in a dark room. But no, and we do sort of look at all of the above in the sense that we will be looking for opportunities on a kind of an ongoing basis, but it's very much discussion with the team as to, does this sound interesting or not? And at that strategic board level, where do we want to prioritize, etc. In the example that you mentioned, that was one that the team had known of for a long time and knew that it was going to be a good fit. So they had nurtured that alongside, which is an impressive feat, alongside the process of us making our investment. So we invested in Cross Rental in August 2021 and completed the acquisition of All Seasons Hire which was a really nice complementary acquisition only a month and a half later. So that was, as you can imagine, there's a lot going on in the process. The team was also bringing this acquisition along, and we were able to do that pretty shortly thereafter. So it was something that they had identified, but it was a really clear strategic fit in terms of building out that aspect of their business in the UK.
Yeah, and I presume ambition for lots more. You don't just do a deal in the first couple of months and then say, well, that's it for the investment horizon. Potentially.
There's often a really good organic plan, as there is with Cross and others. So acquisitions, where sensible, can be interesting. But that said, there's usually also a good plan to grow on an organic basis as well. Yeah.
And was Murgon the first deal in Ireland? Could you maybe tell me a little bit about Murgon? And it has also done an acquisition, hasn't it?
It has, and that actually also happens to have been in the UK. But various of our companies have made acquisitions in Europe, in the US, etc. as well, as I mentioned. So it's not specific. Murgon was the first investment in Ireland. That was in 2019, which is before I rejoined Elysian. I actually spent 6 years with Elysian investing in 2011 to 2017 before coming back to Ireland, and then I set up the Irish office in 2021. So Murgon was the first investment. I knew the business well, sort of in a different capacity, but they're now in the portfolio, which is great.
And they do car trim, isn't it?
They do blow molding, so plastic, and they focus on the automotive, industrial, and healthcare sectors. Right. And it's a global business as well. So there's
huge success story.
It's fantastic, and a great team there as well. Pat and the team, they've got a base in Ireland. They're in Czech Republic, US, and soon to be Mexico as well. So expanding and really, really nice, really nice story. So we've got 3 investments in Ireland now, which is super. And in a relatively short space of time. And I think it's interesting because when I was with Elysian previously and coming over and meeting Irish businesses, I was quite blown away by the quality of Irish businesses, but also there was a less of a familiarity with private equity as an option.
Yeah, definitely,
whereas in the UK, it was I guess it's been around a longer amount of time, so it's sort of more familiar as an option, and I think that's increased now in Ireland. There's a number of Irish funds obviously set up since about 2013-14 who've done a great job in terms of telling people about private equity as an option for, it's not for everybody, but this is something, if you're this type of business and if you've kind of got these ambitions, might suit you, have done a great job. So for me to come back and be able to set up Elysian in Ireland, I think it was a great time. There's lots of super businesses who I'm only dying to talk to. And I think it's kind of a nice space to be part of a larger fund that is Ireland and the UK, but being here in the market.
And I'm interested in that, Laura, because clearly you're very accomplished. You could have gone a number of different ways with different funds, but heading the Irish division of a UK fund, what difference does that make in the marketplace, or what difference does it make in terms of the types of deals you can do?
Sure. It's interesting because it all does come back to the Elysian model, which is something that I've always believed in that we want to have people wherever we want to do deals embedded in those local marketplaces. So from the beginning, there was a partner in Leeds covering sort of northeast England and has relationships in Scotland. We've also got a partner in Manchester covering that area. A couple of the partners based in London will cover the south of England. So the kind of natural next step was to have somebody in Ireland. So we want to have somebody in the locations that we do deals, but have the resources of a really experienced team that will come over. And, at first, second meeting, there'll be generally 2 or 3 of us, and we can then bring the blend of our operating people, some of our experienced people in various different areas, as well as a local person to each opportunity that we look at. And I think kind of being part of a larger fund means that we do have that firepower for expansion for Irish businesses. And Irish businesses tend to, as you know, be kind of looking outwards. And export is something that usually starts fairly early in a company's journey here, compared to other countries. So yeah, I think it's a nice position in that sense. And I think rejoining Elysian, for me, a big part of it was the culture. And I think it gets talked about quite a bit and it's hard to articulate. But I think if you ask anybody, why they joined where they joined or why they stayed where they've stayed, a lot of it has been culture and the people that you work with and believing in what you do as a team. And that for me was a big part of moving back to Elysian, and hopefully it's something that we kind of have with our portfolio companies again, is a genuine, good, strong relationship. And I'm interested, the deals you've done here, Mergon and Cross, very much kind of industrial type companies, Fastway, then a transport company. Sure.
I feel like very kind of real world type companies.
Things you can touch.
Is that typical, or is there an Elysian type deal?
I often get asked to try and identify an Elysian type deal, and it is difficult to articulate. It kind of depends on the situation. I suppose by virtue of the people that are in our fund, we have done more in certain sectors than others. But I think there is a kind of a core theme, which is that we're looking for a team that there's a genuine connection with a really great plan that also wants to work with us. And there are sectors that will have more experience in than others across the team. And you're right, there probably are more assets in our portfolio that are, things that you can touch and feel. But that said, we also have a digital marketing agency. We have a recruitment business, but they're quite specialist in terms of their focus. And there's always something that we really like about the business and something that we really like about the team. And that will just depend on the situation.
And you're a majority funder. You don't really do minority deals, from what I understand. Does the founder typically stay around, or does it up to the kind of the rest of the team to travel the journey with you?
Often they do, okay. And I think it is situation specific. So where you have a founder that's been involved in the business and set it up potentially for a large number of years, and might be looking at what's the future, what's the next journey. I'm not going to be doing this for the next 20 years. The private equity can be a nice transition in that sense. So often there'll be a founder that might take a significant amount of their own investment and chips off the table, which can be nice for them to obviously de-risk some of that investment. Often they will stay involved to varying different capacities, and that depends on the founder and on what their aspirations are. And it also depends on the team beneath them. So it's, a situation where private equity tends to work well is when there is a founder or somebody that's looking to take significant chips off the table, where there's a management team in place. Either they're a part of that team, they're transitioning out of that team, or they've already transitioned out of that team, but that management team still sees the potential in the business and really wants to take it forward. So we back a combination of management teams plus founders, varying different permutations and combinations.
Do you tend to supplement management? Is it usually the same team on exit, or has it grown? Do you add more people? Do you replace people? How does that play out?
I think that the general trend is the team grows. For sure. I mean, if you're looking to scale a business, which is what our teams are all looking to do, you tend to need to go to a bigger C-suite, and you tend to need, to supplement with some really high level appointments, and that we're supportive of that, and sometimes we can help in finding those people through our own network. So definitely growth in employment, growth in kind of senior level appointees is a kind of key theme of most of all our investments, really, I would say.
And is leverage a theme? Do you tend to use much debt?
If you think about it, I suppose it's just kind of thinking about the capital structure and how these deals are financed is probably worth taking that step back. You come up with a valuation for a business, and how is that funded? And it's funded through a combination of our funds, of our private equity funds, often management and founder equity rolled into the deal. And then often it can make sense to bring some outside debt in to fund that, because it's cheaper often, it's more efficient. But it's really important that it's appropriate and that it's tailored to the business, to the cash flows, to what the journey is going to be. And I think we look at leverage in that context. We have one of our partners in-house as a sort of 25, 30 year career in banking. So he's seen a bit. He loves to read loan documentation, so he can be helpful, I think, to management teams in that respect. Genuinely, when you do go into a leverage situation, you've got an investor that's done it a number of times, as most investors have, but also you've got somebody in there that is a genuine expert in banking, and he is a port of call for a lot of our investee companies to phone up and just talk through some of the loan documentation, etc. He's a real specialist in that area, so I think that's great to have him on board. But I think it's level of leverage will depend, structure of leverage. We're very keen that if there's a lot of investment or capex, etc., then that you're not also facing quarterly repayments alongside that. So I think it has to suit the business. It's done in conjunction with the senior team, with the CFO, and it's something that we kind of all go in together on as a team.
Yeah, no, makes sense. We always kind of get the question from people who run businesses, like, well, why take on private equity? I can take a dividend if I want. I don't necessarily need the cash.
Sure.
But you can observe situations in Ireland where companies have taken on private equity and just grown massively, done acquisitions and so on. Do you believe that private equity coming on board, does it push companies forward? Does it change the approach? Easy question.
A few questions in there. Yeah. I think it can. And I think, again, it comes to, as an entrepreneur, as a founder, as a business owner, thinking about what does the next 5+ years look like for you? What do you want? Do you want to still be sort of doing this on your own? Do you want to step out completely and, have another company come in and run your business? Or do you want an opportunity to maybe bring some management through, to take some cash off the table, but be involved in that next journey? And they're the types of businesses that we tend to get involved with, and those types of individuals that want the partnership, that want to have somebody alongside them that's seen a lot of it before. Businesses are all really different and they're all in different markets, but a lot of the challenges of growth and scaling, there's similarities. And having somebody alongside you that's kind of seen it before, done it before, has the networks, is attractive for some people, and they're the type of people that it tends to work quite well with. So I think having the opportunity to take some money off the table is an attractive part of private equity. Having the opportunity to roll back in and invest in the growth, again, can be another thing. And then working with people who have experience in scaling businesses, have experience in some of the things that help create those conditions for growth, can be great. And I think genuinely, sometimes people want a partner.
I agree with that. Yeah. No, something you find founders who've driven businesses to a fantastic level, but nice to have other people around who've got a bit of skin in the game, who can challenge you, who can you bounce things against. I think that's a big factor.
It's kind of any good team in a lot of ways, isn't it? You've got different people with different strengths and different roles, and it's that next step, you're building out a team. It can be, I guess, lonely enough sometimes running your own business for a long time. And if you've got a really great partner on board and there's a good relationship, that can actually free people up to want to do more. is what we've found anyway.
I'd see that too. I'm going to ask you the question no one has enjoyed getting so far. You've been in private equity in the UK before. You've been an advisor. You're in private equity now. Over that time period, is there a deal that was your favorite deal, or are there characteristics of deals that really kind of for you ticked all the boxes?
Sure. I'm not sure anybody's answered that question yet, actually.
I'll keep trying.
I'm not. And I was thinking maybe in a few years' time or a long time, when I'm looking back at my career, I might be able to answer that question.
This is where I get told you're not as old as me, yeah?
I'm definitely getting older, as I've been told a few times by my colleagues. But no, I think it is difficult to pick. I think it's impossible. Characteristics of deals that I like that have gone well, I think, at risk of repeating myself, it's been when there has been a really good partnership, and clarity from the beginning on all sides, I think, is always really helpful. I think throughout investment, when you do hit bumps in the roads, it's always really interesting, because that's sometimes where the strongest bonds are forged.
I agree with that. Yeah,
and you go through the investment, and it's really, for me, it's a complete privilege to work with these businesses and sit alongside them on these journeys. What's also really, really fantastic is when you get towards the exit and going into private equity transaction. I suppose everybody is aware and aligned that there's going to be another event in a number of years' time. So everybody's kind of on that page. But finding the right next home for the business is something that's really important to us as well, and something that suits management as much as it suits us. That's key. And so some of the transactions where I've been involved through the journey, which has been a privilege to do, and then to see it find a new home that the team are really happy and excited about, and to see it go on. Actually, I sometimes think when you see that next journey, and whether a company, after we've exited, whether it be to another private equity fund or to trade, or it IPOs, to sort of see that next stage is really amazing.
Yeah, there's always a connection once you've been involved. There's always
once you've been involved, yeah, exactly.
I have to. We're in a very volatile world at the moment. Are you still writing checks? Are you still keen to do deals? We
are. I think we raised our first fund in 2008, 2010.
Okay, yeah.
And
so, volatility.
So we know volatility, and some of our greatest deals have been during that time period. Like, I think there's certainly a lot to be cognizant of, and things that we all need to think about. But that's our job, and we have to. It certainly keeps it interesting. Raised our third fund during COVID, so I think there's been definitely a theme of investing throughout cycles.
Good businesses find a way.
Good businesses find a way. I think that's it. I think fundamentally, if a business has a reason to grow and a really great team, then that's something that's going to be attractive to us.
Laura, about to wrap up. Any final words on why companies should consider private equity?
Sure. I think private equity is an option. I think we've talked about that. So I think it is about thinking about what you would like going forward. But I think if you're ambitious and you have a plan, and you're looking to develop a plan to grow your business, and you'd like a partner alongside you, then private equity can be a great route. I think talk to us, get to know the people, and then that'll be one of the key, determinants of, do you want to have that conversation? Do you want to take it a little bit further? It's not 0 to 100 in a couple of days or weeks. It's you can get to know these people, and we're always open for conversations.
Yeah, wise words. Laura McCoy from Elysian Capital, you've been a great guest. Thank you very much.
Thanks, David.